Good evening, everyone. This is Henry Gambell with simpleroptions.com, and in tonight's free video I wanted to share some ideas with you on Disney. So when we look at Disney and when you ask yourself first and foremost, why are we even considering trading this chart? More often than not, that answer for me is the daily squeeze. The daily is a good swing-based time frame, and the squeeze is an excellent signal that shows you that a market is about to have a significant move. You say, okay, it's about to have a significant move. Which direction do we think that move is going to be? That's where I find that these moving averages are so helpful. They're very basic, but when price is above them, you tend to see more bullish advances. So very basic, very straightforward, but I think we've got a lot of different reasons to think that Disney will continue to do well. I also think that now is the time to be considering taking a position because look at how well it's been handling these pullbacks to the 21 EMA. It's just another way of saying that if I'm wrong about this idea, we'll know it pretty quick. And if we want to try and get it where we still have an edge, this is the time to do it. Not trying to buy it when it makes a break up above 112. We're $2 away from where we're currently trading. So that's what I see in the chart pattern. That's why I think that something is about to happen. Now which way do we look at playing it? When you come back down and take a look at your options chain, one of the things in Thinkorswim that I found to be extremely helpful is this IV percentile. Being in the lower third of this percentile essentially just tells us that implied volatility here is very cheap. But one of the things that I'm working to add to my trading a little bit more is really creating theta positive positions even if I don't have a lot of implied volatility to work with. What I would look at in the past would probably be just something where you come out 18 days, look at buying a directional call, and look for the squeeze to fire. That is awesome when it works out that cleanly, but when you get into a situation where instead it trades sideways for a week or maybe even two, it can be tough to hold those directional calls. In that way of thinking, I think that the best way to set this up is to sell a vertical in the March series, do that about $3 wide, and taking in 80 cents is not quite as desirable as we would like to see, but it will still be part of the trade that helps generate positive theta for me. So set that up there, and then come out in April and pick up some of your either the 100 or 105 calls, depending on how much you'd like to allocate to the trade, but I think that's a good way to get some directional exposure for when the squeeze fires long, sell some shorter dated puts to help finance the trade, and then if the whole thing falls apart, I will, close my position and revisit the idea on a daily close below those lows. So I hope that helps, gives you something to think about as you get into Tuesday's trading, and we will see you at the next free video.